Hi, this is Stephen Cox back again with your Navigator's three-way to estimate the share price of a company. So we're now going to look at this PE formula. And again, I'll reiterate, we explain earnings per share and PE ratio in much greater detail in our long course. And this is a short course. So the share price formula is simply the earnings per share. So that's basically the profits of a company in a given year divided by the amount of shares outstanding. So basically, it's the earnings per every one share multiplied by this price to earnings ratio. So the price to earnings ratio, think of it as an investor sentiment ratio. And that goes up and down all the time, every single day. And that really depends on, the future outlook of a company. Sometimes companies have high price to earnings multiples, and that's usually when they're expected to have high growth going forward. And sometimes they have low price to earnings multiples, and that's usually indicates a company with slower growth going forward. And it's also industry specific. So, comparing the PE ratio, for example, of Starbucks to Microsoft is pointless. You'll never get any or extrapolate any type of information from that. So again, just to note, we've covered that in greater detail in the long course. So we're going to go back to our Alaska Airlines example. The share price is currently 38.50. So let's say, for argument's sake, the analyst gave us their estimates for earnings per share going out for the next 2 years. Well, we would have one part of the formula, and we're going to show you where to get that information from and where to get maybe the price to earnings ratio that we're going to use. So what we've got to do now is actually go back to TradingView. Again, we're going to use Alaska Airlines. We're going to be presented with this screen. But this time on the top right here, you're going to see kind of four squares here. We're going to click on this one and click on financials. So what we're looking for here is earnings estimates. So we click on this earnings tab and make sure you change it from quarterly to annual. So we click on annual. And what you can see here is it's given me the previous 5 years of data as to what the company actually reported up to 2023. But it's also given me the analyst estimates going forward into 2024, 2025, 2026. So we're going to look at 2025, and you can see that the estimate for earnings per share for 2025 is $6.01. And we know that there's an 11 analysts covering that. We know that from the previous video. So we have one part of our formula here. So we can see that 601, but what about the PE ratio? We've got to go and find out about that. So back to our TradingView platform again. This time we're going to move over to the left here and look at statistics. And again, make sure you change statistics from quarterly to annual. Very important. So what this is doing here, over the last 5 years, it's giving you the price to earnings ratio. So it's telling you what the company traded at on a valuation multiple. Now, it's very important here to understand that these are investor sentiment ratios. Remember here, it's the PE ratio here is 11, basically, if you round it up, and it went as high as 94. And the reason from that is, don't forget what happened in 2020. That was COVID. So remember, no airlines were flying. This is an airline. So obviously, profits were down. They were losing money, and it took some time to recover. So that's why these multiples here can be skewed quite a bit here. So what you have to use then is go back previous to COVID and see, well, what did it trade at? And you can see here it was 11 times earnings, and maybe there was other times. I've got more data than you guys here, and I know that it can trade up to 15 times earnings. So we will use a trading range here of 11, let's say, to 14 on this. So we go into our next slide here. Now we know we ignore the outliers, as I've mentioned before. The PE range is 11 to 14. So now we can get our low estimate. So we simply input the data into the formula. So 601 multiplied by the PE ratio, we use 11, we're going to get a target price of 66. And then on the higher side, if we use the higher range PE ratio of 14, we'll get a target price of 84. So then what we'll do is get an average of all of both of those there, and we get an average target price of 75 based on this PE formula. So now we know a target price that we've calculated ourselves based on the PE ratio going forward, right? And the earnings per share going forward. But please remember two things in this. First, this is an estimate here, 601. That can change sometimes for the better, sometimes for the worse. A great example for the better recently is Nvidia. Nvidia, every time it's announced earnings, keeps beating its earnings, and it keeps changing that going forward. Then if you look at other stocks that have been the opposite, sometimes they don't meet their earnings and they guide lower going forward. So these can change. That's why we always emphasize and will always continue to emphasize you need to do your qualitative research as well on each specific company. Make sure you are happy that that company's earnings estimates are realistic. And then the second multiple we're using here is price to earnings. So if, for example, Alaska Airlines are looking at future growth, so that's why I'm confident in this PE range here. But let's say the future growth rate was negative. So let's say the stock was earning $4 a share right now, but in 2 years' time, it's only forecasted to earn $3 a share. Well, that's a negative growth rate. And therefore, I would be looking at a lower PE multiple then because the growth rate is going negative. But because the growth rate is expanding and we look at the historical PE ratios, I'm confident in this range here. And that's why I would believe that this kind of price range is attainable, assuming this earnings per share estimate is correct. Okay, we're going to move on then to the price to sales formula and see what type of target price that shows up. And we'll do that on the next video. Thanks and bye for now.